Welcome back to the Algobot channel, where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm Algobot, and today we're studying an expert advisor called Confluence Engulfing. This is a pure price action reversal approach that blends two classic ideas: floor trader pivot levels and engulfing candle patterns. Over the next few minutes, you'll learn how the strategy maps out support and resistance, how it waits for a candle to confirm those levels, and how it manages its stop loss and take profit. Remember, everything here is educational analysis only and not financial advice. Let's dive in. So what exactly does this expert advisor do? Confluence Engulfing is a pure price action reversal strategy. It doesn't lean on lagging oscillators or a stack of indicators. Instead, it fuses two well-known concepts that traders have used for decades. The first is floor trader pivots, those objective support and resistance levels labeled PP, R1, R2, S1, and S2, calculated from the high, low, and close of a recent window of bars. The second is the engulfing candle, a two-bar reversal pattern where one candle's body completely swallows the body before it. On their own, each of these tools is noisy. An engulfing candle can appear anywhere, including the dead middle of a range where it means very little. A pivot level is just a line until price actually reacts to it. The idea behind this strategy is confluence, only acting when both elements agree. A bullish engulfing that reclaims a support pivot suggests buyers are defending that level, while a bearish engulfing that rejects a resistance pivot suggests sellers are defending theirs. The expert advisor runs on a single time frame and a single symbol, so you could apply it to a forex pair, a metal, or an index on whatever chart period you choose in the tester. It uses the average true range to scale everything to current volatility, the tolerance around a pivot, the stop distance, and the take profit. It holds just one position per symbol at a time, so it won't stack trades on top of each other. Who is this style suited to? Educationally speaking, it tends to appeal to traders who like clean, rules-based reversal setups and who prefer waiting for confirmation at a defined level rather than chasing momentum. As always, this is information for study, not a recommendation, and trading carries real risk of loss. Let's break down the mechanics step by step. On every new completed bar, the strategy first checks that it has enough history, the PivotLookback, plus the ATR period, plus a few extra bars for the engulfing pair. If there's already an open position on this symbol and magic number, it stands aside, because it only manages one trade at a time. Next, it builds its map. Using the window of bars that sit just before the most recent two candles, it finds the highest high and the lowest low, takes the reference close, and computes the classic pivots. The pivot point is the average of the high, low, and close. R1 and S1 are the first resistance and support, and R2 and S2 are the wider second levels. These become the lines the strategy watches. Then it measures volatility with the average true range and sets a tolerance equal to ConfluenceAtrMult multiple times that ATR. This tolerance is how close a candle's wick must come to a pivot to count as a genuine touch. Now the pattern check. The strategy looks at the two most recent completed candles. For a long, it needs a bullish engulfing. The current candle closes above its open, the previous candle closed below its open, and the current body fully engulfs the previous body. The body also has to be decisive, at least min-body R multiple times the ATR, which screens out weak, indecisive candles. On top of that, the candle must have dipped to or through a support pivot, S2, S1, or the pivot point, with intolerance, and then closed back above it. When all of that aligns, the strategy signals a buy at the ask price. The exit plan is defined before the trade is even placed. The stop loss goes just below the low of the engulfing pair, with a small ATR buffer, and it's never allowed to be tighter than the ATR-based stop distance. The take profit is set at TargetRR times the risk, by default 1.8 times the distance to the stop. The short side is a precise mirror. The strategy detects a bearish engulfing that pokes into a resistance pivot, R2, R1, or the pivot point, and closes back below it. It then signals a sell at the bid, places the stop just above the high of the pair, and projects the take profit the same proportional distance below the entry. In both directions, the stop and target are defined up front, so every trade has its risk framed before it begins. Here's the heart of the expert advisor as it appears in Meta Editor. At the top are the input parameters you can adjust in the strategy tester. PivotLookback, set to 24, is how many completed bars define the prior session used to build the pivots. ATR period, 14, sets the volatility measure. ConfluenceAtrMult multiple of 0.40 is the tolerance for how close a wick must come to a pivot to count as a touch. Min-body ATR multiple of 0.60 is the minimum engulfing body. Stop ATR multiple and TargetRR, 1.2 and 1.8, define the stop distance and the reward to risk on the take profit. Lots is the fixed position size. Now the long block. The bull engulf condition checks that the current candle closed above its open while the previous candle closed below its open, and that the current body fully engulfs the previous one. If that's true, and the candle also touched one of the support pivots, S2, S1, or the pivot point, from above, the entry is the ask price. The stop is set below the pair's low, never tighter than the ATR risk, and trade.buy sends the order with that stop and a take profit at TargetRR times the risk. The short block is the mirror image. The bear engulf condition wants a bearish candle engulfing a prior bullish one, touching a resistance pivot, R2, R1, or the pivot point, from below. The entry is the bid. The stop sits above the pair's high with the same ATR floor, and trade.sell places the order with a take profit projected the same proportional distance below entry. Let's walk through this illustration candle by candle to see how Pivot Confluence Engulfing thinks. Before any trade, the strategy has already drawn its map. From a rolling window of earlier bars, it calculates the floor trader pivots, and on our chart you can see 3 of them as dashed horizontal lines. The support pivot S1 down at 1.0835, the central pivot point at 1.0865, and the resistance pivot R1 up at 1.0895. These levels are the objective lines in the sand that the strategy watches. Look at the opening candles on the left. Price is drifting lower, sliding down from the pivot point toward that support level at 1.0835. Notice the strategy isn't acting yet. A level on its own is just a level, and price approaching support is not a signal by itself. It's waiting for proof. Now watch the next candle dip down and actually pierce the support pivot at 1.0835, with its low poking just beneath the line. On its own, that breach might look like sellers winning. But the very next candle is the one that matters. It opens near the bottom, then closes strongly higher, completely engulfing the prior candle's body and reclaiming the support level, closing back above 1.0835. That is the bullish engulfing at support, demand stepping in to defend the line. The strategy also checks that this candle's body is decisive, at least 60% of the ATR, so a tiny indecisive candle wouldn't qualify. With the engulfing pattern and the pivot touch lining up, the buy entry marker appears right at that candle's close. Risk is defined immediately. The stop loss is parked just below the low of the engulfing pair, beneath that fresh low under support, and it's never allowed to sit tighter than the ATR base distance. From there, the take profit is projected at the reward to risk multiple of 1.8 times that risk. In other words, the target sits well above entry, and you can see it marked higher up. Follow the next few candles. Buyers stay in control. Price climbs back through the pivot point and pushes upward, candle after candle, until it reaches the take profit marker. The long trade closes there in this illustration, with price traveling the distance the strategy mapped out in advance. Now the market shifts and gives us the mirror image, a short. Watch price grind higher and approach the resistance pivot, R1, at 1.0895. Again, the strategy waits. One candle climbs and pokes its high up to the resistance line, even nudging just above it. Sellers could be trapping the breakout, but the strategy needs confirmation. The following candle delivers it. It opens higher, then closes lower, engulfing the prior candle's body and rejecting the level, closing back below 1.0895. That's the bearish engulfing at resistance, supply defending the line. Its body, too, must clear the minimum ATR threshold to count as decisive. With the pattern and the pivot touch confirmed together, the sell entry marker prints at that candle's close. The risk picture is symmetrical. The stop loss sits just above the high of the engulfing pair, above where price was rejected, again floored by the ATR distance. The take profit is projected the same way, 1.8 times the risk, this time below the entry. Watch the closing candles roll over. Price slides down away from resistance, back through the pivot point, candle by candle, until it reaches the lower take profit marker, where the short trade closes in our example. So in both directions the logic is identical. A meaningful pivot level, a decisive engulfing candle confirming the level is being defended, a stop beyond the structure, and a target set as a fixed multiple of that risk. That confluence is what filters out the many engulfing candles that form harmlessly in the middle of a range. Of course, not every signal plays out this cleanly, and losses are a normal part of trading. That brings us to the end of our breakdown of the Pivot Confluence Engulfing Expert Advisor. We covered how it builds floor trader pivot levels, how it waits for a decisive engulfing candle to confirm that a level is being defended, and how it frames every trade with an ATR-based stop and a fixed reward-to-risk take profit. We also walked through both a long and a short example on the chart and read the core logic directly from the MQL5 code. Remember, everything in this video is educational content only and not financial advice, a recommendation, or a solicitation to trade. If you found this useful, please like the video, leave a comment with the strategy you'd like analyzed next, and subscribe for more MT5 strategy breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.